The Indian auto sector is at a peculiar spot, and with the challenges and opportunities in the mega BS6 emission and safety norms, the spotlight is also on the government's push for electric vehicles. These uncertainties provide a good opportunity to back the biggest winners in the sector. That's the main backdrop for Axis Capital's 4th annual auto conference. And to talk about all of this, market outlook and valuations, joining us is now Mr. S. Subramanian, Managing Director and Head of Institutional Equities at Axis Capital, and Jayesh from our research team Johnson to take the conversation forward. Jayesh, over to you.
Good morning, Mr. Subramanian. First question to you is that the conference timing is very interesting, given that the global markets have recovered from their low point, but the India market has struggled. So what is the mood of the participants at the conference?
I think that the mood of the participants is quite positive. They are here to understand from the companies in the auto conference as to what's happening to the economy. It's also, as you know, auto is the lead indicator for the consumer sector, and therefore in this conference they would be meeting about 15 companies, from OEMs to auto components to financiers as well as dealers, so they get a cross-section view of what's happening in the economy. So at this point in time, the mood of both the companies which are presenting as well as the investors is quite positive.
And what have you made of the valuations in India, given that Nifty is currently trading at 21 times forward earnings?
See, our view essentially is that according to our research, Nifty, the way we look at it is to March 2020 numbers and a March 2020 numbers. It's broadly in the region of about 17.5 numbers. It is, while it is towards the top end of a long-term average, it is not in the bubble zone. The question to ask about the valuations as far as the market's concerned is what's going to happen to interest rates. Our quick straw poll, which we did with a lot of treasury heads and bond fund managers, tells us that they do not expect interest rates to spike from here. How long will it take for it to subside from here is a different question, but I don't expect anyone is expecting that the interest rates to go up from here. If the earnings momentum continues as to what we are seeing in the fourth quarter, as well as into the next year, I think that we would be looking at the markets being valuations wise. You could see some PE compression, but the PE compression need not come through a fall in prices. The PE compression can come through a expanded earnings as well.
Now, oil prices have rallied and stabilized above the 60 mark. How much do you think this will impact India going forward?
Oil prices is an important element for Indian current account deficit as well as for inflation. But I think that overall prognosis for most of the people, if I look at Platts year forward, I think that most of the expectation is that oil should stabilize between $55 to $60. If that is the case, I think that RBI expectations of an inflation to be in the 4 to 5% range should come through. So it has got more of an impact on current account deficit and not so much on inflation if the oil continues to stabilize between $55 $60.
Now the primary market activity has been on a high in recent times. What have you made of the primary market pipeline, and do you like any of the upcoming IPOs?
The pipeline is very good. It tells us two things. One is that as long as a company is coming in, a good quality company at reasonable valuations, you would see significant market participation. We are right now in the midst of, today is the opening for Bandhan Bank. Yesterday the IPO anchor book got done. As you would see from the announcement, there were 65 investors who had come in, pretty large number of very high quality investors in the book. We think that that's an outstanding issue. we would see significant institutional participation going ahead, even in the IPO itself, which starts today and closes on Monday. There's also another outstanding company which is presenting, which is the Government of India's Hindustan Aeronautics Limited, which is also coming out. Excellent issues which are there. Another good quality company from our stable is Sandhar, a auto component company, which is also seen a significant investor interest. The anchor book for that is tomorrow, and we will be able to see what kind of a demand that's been able to gather. But overall, I think that the IPO pipeline is good, healthy. I think that as long as the companies are able to price their issues reasonably, I think investors are looking forward to participate in Indian companies.
Now, talking about sectors, the IT sector has made a comeback in 2018 with the Nifty IT index being the only sectoral gainer. Do you think there is more room for upside?
If you really look at IT, and you said it right, they have made a good comeback in the current year. It's also off extremely debilitating 2017, which they saw. My IT analyst is very bullish on the sector. He's looking at double-digit growth for the leaders. And if you're seeing double-digit growth come through, these companies will still see upsides in the region of 11 to 15%, depending upon which company you're looking at it. Therefore, we still are very positive about the companies in the sector. We think that if the global interest rate scenario does what it is, the rupee, which has been very, very strong, if rupee stays even stable at around 65 to 66 level, should be another positive thing for the IT industry. The third element essentially is that Indian industry gets nearly 40% of its revenues from the BFSI sector. We are seeing global BFSI giants like JP Morgan and others starting to spend once again on IT, and we think that and the digitization push is continuing. Indian IT vendors would be beneficiaries of those upticks as well. So I think that overall that the Indian IT industry upside is not yet over, and I think that the good times are still there.
Well, one final question then. Any of the other sectors that you think are currently attractive, or something that you would avoid at the moment?
We need to look at individually company to company. Broadly, I think that we would be able to find gems in most of the places. The only area which I have interesting to note essentially is that the consumer staples, while they will continue to do well, and if the monsoons are good, will continue to do well, are reasonably, attractively, expensively priced. That's the only sector in terms of a price performance I would worry about, not in terms of the underlying fundamentals. But other sectors you need to look at bottom-up, stock-specific rather than a broad sector brush.